Hello, everyone. This is Bruce Fleet, Fleet Capital Management. It is Sunday, April 22nd at about 5 p.m. Pacific time. I'm just sitting down at my desk starting to think through the opening of the markets for tomorrow morning, starting a new week. And I thought I would just show you, as I have expressed in my emails from time to time, that we're at an interesting point or an inflection point in the markets. This is going to be a short video, I hope, but I just want to show you the four major US indices and how they look on the charts. So what we're looking at here is the Dow Jones Industrial Average, and the chart I'm using is the DIA, which is the ETF representing the Dow. And what I've done, each mark here, each candle is a single day. We're looking at a daily chart. The high for the market was on January 29th, and then we went into a correction phase. Since then, we've kind of been moving sideways. It is a sideways market, but based on the lines that I've drawn, the trends and lines that I've drawn, this is called a descending triangle. A descending triangle is generally a bearish, what's called a continuation move using technical analysis. But the reason I felt this was somewhat bullish for the last few days is that you will see that for 3 of the last 4 days, we closed above this red line here, which is the 50-day moving average. That's a very bullish mark. And we were closing above that turquoise trend line. Those all looked bullish to me, even though the entire pattern is considered a bearish pattern. This past Friday, though, things changed. On Friday, the Dow closed below the 50-day moving average. It is close to the trend line. It's actually sitting on the trend line. But the fact that it closed below the 50-day moving average is a bearish signal. It doesn't mean that's the way it's going to play out, but that's what I'm seeing on this particular chart. So when I say we're at an inflection point, this can go either way right now. It can go back up into bullish territory and break through this bearish pattern, or it continue to fall. So that's interesting. But let's look at the other indices to get a full picture. Here is the SPY, which is the S&P 500. Again, you'll see when we fell into this correction phase, but I've drawn my trend lines. And many, many times you've heard me in the past say we're in a sideways market. I think this is a real great visual to show you how we are in this sideways market. Sideways market, you have very strong up days, maybe even an up week, and then you have weak days and maybe even a longer weak trend. And it's just hard to know which side of the trend to get on. But if we look at the right side of the chart, you're going to see something bearish. Again, on Friday, it broke below that red line. I hope you can see that, which is the 50-day moving average. That's a bearish signal. Now, I don't normally consider it a bearish signal until it does it 2 days in a row. So we only have one day, Friday, because the other days of last week, we were above the 50-day moving average. So a continuation pattern like this, a sideways market, is generally a bullish pattern. That means the market was going up significantly as it did last year, and then it's taking a breather and consolidating, going sideways. So this is the whole pattern is normally bullish. When it's above the 50-day moving average, that adds to the bullishness. It doesn't get runaway bullish until it breaks through the upper trend line, but we were in that direction, you can see, for quite some time. Friday's market gave me some pause. It could go either way now. There's really nothing happening from Friday that's telling me this is going to be bullish or bearish. If we go down again on Monday below the 50-day, I would suggest we have turned bearish in the market. But here's some strength, which is quite interesting. These are the Qs, or the NASDAQ 100. And what you're going to see, this particular trend line setup is called a channel. And you can see the market is just working within that channel. That channel is bullish by its very nature because you have higher lows and higher highs over time. So all of that is bullish. The negative is, same old song. We broke down below the 50-day moving average, which is a bearish sign, but it was only one day. I want to see what happens over a few days. Finally, whoops, wrong one. Let me go here. The IWM is the Russell 2000. Here you have what's called an ascending triangle. On the Dow, we had a descending triangle because the top line was descending. But here is an ascending triangle, which again is a bullish continuation pattern. And what you'll see here is that not only are we above the 50-day moving average, we're above the 20-day moving average, and we are even above the 9-day moving average. This is a very bullish pattern right here. So in putting those four indices together, there are 2 points that I would make. In the overall aggregate of the four industries or indices, I think what you'll notice is that we're at a crossroads. It could go either way. It could go up or it could go down. But if we look at it that the riskiest area, which is small caps, are certainly the riskiest of the four indices, is in a clear bullish pattern, that suggests to me that the big money, the institutional money, is saying, at least in small caps, and by the way, small caps are far less affected by trade wars because small caps inherently do business within the country and not outside of the country. This is telling me that it may be a risk on, that institutional managers are looking in the way of small caps to lead the way going forward for at least the next few months. So I would end by saying, again, I think in totality we're at a crossroads. This market could go higher or lower, but also zooming out, I think that if the riskiest area is showing me the most bullish signs, that could be bullish for the market. This next week is going to prove pivotal, in my opinion. My gut says this market is going higher. I try not to follow my gut too much. My mind is telling me that we have a strong economy with strong earnings, and that should bring the market higher. But the other side, the skeptic in me, says we've got some geopolitical problems. We have tensions rising with Russia. These trade wars have not gone away. Because of the trade wars, we have interest rate fears. Commodity prices are rising. Oil is rising. Interest rates could be rising. We have some crosswinds. There's no question we have some crosswinds, and certainly we have some political issues here at home. So stay tuned. We will continue to manage this going forward, but I just wanted to give you a quick update as to where I see the markets right now. I hope that helped. If you have any questions after this, please let me know, and I'll be more than happy to answer them as always. Have a great rest of your Sunday night, and we will start this thing up again early tomorrow morning. Bye-bye.